Hi friends, I am Abishek S Panday, and this is a channel where we'll be discussing the broader and the granular finance topics impacting us in our day-to-day life. We are going to discuss what could be the major trends that we may see in 2024 in the investment journey. The way forward for 2024 in terms of the event that we need to watch out for, or the factors that we need to watch out for, the most important, the first one that we should be discussing would be Indian general election. Friends, you would recall that in 2023, the picture was not very clear, given the opposition parties were trying to reach to a consensus so that they can fight in one block against the ruling dispensation, which is BJP. And first 6-7 months, we saw what was happening. All kind of discussion and trying to tie it up and trying to give a fight to BJP. All of the opposition party came in one block and decided to fight the elections as one versus BJP. And even by 15th or 20th of November 2023, now there was a consensus, at least in the media, there was a consensus between the people that whatever happens in these state elections, a mirror image or these elections, these state elections will shape of the things to come in 2024 in general election. First week of December, we know what happened. The BJP won convincingly in 3 states, and 1 state, Telangana, went to Congress. Mr. Market erupted in joy. This was a thumbs up from the market, expecting the continuity to happen. All of you would recall that any market in any country is very susceptible and very prone to surprises. It does not like surprises. And that is where expecting Mr. Modi to continue, the BJP to come back to power, the market went to high and has been on steroids since then. Even the opinion polls that we have been looking at are predicting return of Mr. Modi. So this has actually resulted in the markets moving northwards from 67,000 in first week on the first week of December prior to declaration of results to about 72,000 as we speak. From journey from here on will be dependent on many factors, including the outcome of Indian general election. While this is discounting the return today, today the prices are factoring return of BJP. We have to be mindful of that. It does not happen theoretically. Markets may nosedive. They may correct because the return of BJP is already factored here. Similarly, we have another election to watch out for, and that is US presidential election to be held in 2024. About 10 months, they will be running the process on preliminaries to whatever those steps are to be taken until the finalization of 2 candidates who will eventually fight between themselves to be selected as the President of the United States of America. 5th November 2024 is election day. And this election will have important ramification for the country, US. And given today all the markets are interlinked, it will also have an impact on Indian markets. So let us see how it happens. So another thing to watch out for from investor perspective will be RBI stance to cut the interest rates. It has been widely reported in the media that nobody is expecting RBI to cut rates before June next year in 2024. And rate cuts happens when it happens, by what quantum it happens, will drive the market forward. And similar to that, we have to also be cognizant of how Fed has been behaving. All of you will recall that since March 2022, the Fed has been increasing rates. It has in fact increased rates 11 consecutive times, a record in itself. And post 11 consecutive increase, the policymakers have held the interest rate steady for 3 consecutive times. The last one being December 23. Now it is expected that there is an increased likelihood that Fed will now begin to reverse the course and cut the rates. If that happens, that augurs well for liquidity. And once the liquidity is there in the market, so it will drive the stock market up, be it a US market or be it an Indian market. All of you will recall that when the quantitative easing process was initiated by US, it resulted in a big time increase in stock prices all across. So if now US goes back to quantitative easing or reduces quantitative tightening, so there'll be ample liquidity to be found, or at least to start with, there'll be a liquidity, and gradually it will go to the ample liquidity, quote unquote. So we have to watch out and see how it pans out. Nevertheless, it's a very, very important factor to watch out for. Then corporate earnings for 2024 is also an important parameter that we need to watch out for. Markets are at all-time high. A small slip here and there may also be a bigger trigger for bears to come back and short the market. Once that happens, obviously market will correct. And it is in any case expected that at such a record high, everybody is in a hurry to take some money home. So we'll have to wait and watch out who takes more money and who wins and who loses. But nevertheless, the corporate earnings is something to watch out for, keeping our fingers crossed. Let's see how it goes. The next in this section will be the liquidity and the value migration. It happens always. The money moves from one sector to another in search of value, where there could be a margin of safety, or there where more money could be made at lower risk. So how does that happen? That happens when you sell in heated sectors, buy in sectors where value is there, which are not heated as of now, and then there is adequate margin of safety too. That is what happened. We saw last year the small cap and mid caps are the sectors which were really booming. Some of the research houses ascribed that to reversion of mean to underperformance in earlier years to good performance in 2023. Some, like Kotak, thought that was irrational exuberance. Some felt that this boom in small cap and mid cap will eventually lead to a resurgence in large cap stocks, because that is where the market is expected to find value now, because they have not given the kind of returns in last 2-3 years. And then there were FPIs who were, while they were net sellers in 2023, we'll see in the next slides that on a net basis, they were net seller last year in 2023. They were putting in some money in the month of December. And where did they put their money in? They put in the large cap banks because they were hardly undervalued. So we will discuss in our forthcoming videos how the large cap banks, who have doubled in terms of their revenue and about doubled or more than doubled their profits, are available at about same level they were there about 2 years. So all this is going to be very, very interesting to watch out for. So the next year, 2024, is going to watch out for. It's going to be very interesting. Now, FII money flow in India, it is also expected that certain portion may be diverted to India out of the China portfolio of FPI and FII. This is happening because of political stability in India, political instability in terms of, I won't say political instability in China, but financial performance in China and other issues that has been plaguing China for some time are also responsible. So there are funds which are watching out for potentially stable political regimes where they can put in money. So some money could be there coming out from there. And that could be about 500 billion or spread over 5 years. That is a substantial amount of money. And media reports have been coming out to that effect. Then there is another one, inclusion of Indian bonds in global bond index. About 20 to 25 billion, which is about 1,60,000 crores to 2,05,000 crores, is the money which is going to come to India. If that inclusion of Indian bonds in global bond index happens, and other FII money, which in any case have been come. As I was telling you that in 2023, the FII have been net seller out of Indian market. So we can see they have sold a substantial amount as compared to 2022 and 21. So it is expected that FII money will come back in 2024. And if that happens, what happens? The market will dance. Who will dance? The large caps or the better governed companies will be the ones who will be deriving advantage. And that is what we discussed a few minutes back when we said that they have been lapping the big banks, Kotak and SDFC banks. So to summarize, 2024 is going to be a pot boiler in sense. A lot of activities up there. Upcoming election in India and US is going to be interesting to watch out for. Inflation and liquidity is another important factor to look to. The corporate earnings is going to be critical. Then mean reversion and sector rotation always happens. It happens all the time, where the smart money tries to approach stocks where there's margin of safety, and that continues. Then FPI and FII money, the Chinese portfolio, diversion to India, a certain portion of that, inclusion of Indian bonds in global bond index, volatility. The markets are at all-time high, and a small miss on target may make markets choppy. However, on long term, the story remains intact for long-term investors with a horizon of more than 5 years. The structural reforms and digitization in India continue to augur well. So long-term investors should not worry. The story remains intact for them. So that is from me today. Hope you liked what we had to share today with you. Look forward to your help and guidance and your support all time to come. Thank you so much. Signing off today. Thank you so much. Good night. Shubhratri. Namaskar.